But Gaurav Mehta, fund manager at Ambit Asset Management, is still with us. Gaurav, just looking at some of the earnings, and we've talked about how PSU banks should looked at, what one should do with IT as well as pharma. What are the other pockets that you at Ambit feel are good spaces to ride this volatility that the year ahead is going to throw up at us?
All right. So, I think our approach has been to look for, look for good and clean managements in structural stories. And from that point of view, I think there are three pockets that stand out to us with respect to providing good structural opportunities for long-term investors. The first pocket is obviously consumption. In India being a 1.25 billion people strong country, obviously consumption is a secular theme. But within consumption, I think we are more focused on discretionary consumption, because as the per capita GDP improves from about $1,700 today to maybe $5,000 in a few years from now, it's the discretionary consumption that's going to see a massive boost. So discretionary, consumer discretionary is a sector that we like. I think the second pocket that we do like is the fact that good quality lenders will continue to be a structural opportunity in India, because India, all said and done, is still a capital starved country. So be it well-run private sector banks or be it good quality NBFCs, I think they will continue to have a good run ahead of them on a secular basis for the next several years, hopefully decades. So that's the second piece that we like. And the third piece, apart, we obviously did cover pharma to a little extent a while earlier, but I think in general, light industrial manufacturing is something that India does very well in. And from a global point of view, there are tangible cost advantages that India has. So so pharma is a one small subset of that light manufacturing exports, but be it specialty chemicals, be it industrial, small sort of light industrial exports, all of that forms a part of that bucket. So overall, consumer discretionary, good quality lenders, and light manufacturing exports are the three pockets that our portfolio typically comprises of. In the recent correction, I think of these three pockets, one subset that has become very, very attractive is the home building segment, because that eventually is discretionary consumption that should have secular wings to it. But thanks to the last 4 to 6 weeks of market correction, a lot of leaders from tiles, from pipes, from paints, etc., have become very attractive, and I think that's one pocket that we'll be sort of looking to add positions in this correction.
Right, interesting. Gaurav, give us a sense on where you would be contrarian in this market, if at all. Any pockets that stand out, and particularly how are you playing the investment-led theme? Because with the earnings profile improving, one would expect that companies would step up on expansion.
Right. So I think one pocket that should very clearly, within financials, for example, financials is a very large pocket. You've had NBFCs do very well over the last few years, but within NBFCs also you've had particularly housing finance companies that have done very well. So I think our position on that is very contrarian, which is to say that as interest rates keep rising, and I think that's a phenomenon that we'll all have to live with, as the economic growth materializes and as the economic recovery becomes stronger from here on, not just in India but globally, you will see that cost of capital will keep rising. And as interest rates keep rising, I think housing finance companies will feel the pressure, because what they are doing is very simple. On a leverage of about 7-8 times, they have a big asset liability duration mismatch, wherein their assets are typically several years, maybe 8-10 years on average, the mortgage assets, but the duration of liabilities is pretty short. So as interest rates keep rising, I think that's one pocket that will see the heat. And given the valuations as they are, I think it's still exorbitant, and from that point of view, I think we will be very wary of the housing finance companies in general, and that's one pocket which we know is sort of a market darling, but we'll take a contrarian bet there and avoid that completely. The flip side of that is that a lot of good quality, decently run private sector corporate lenders have also been under the hammer for the last several years, because obviously their underwriting in the previous cycle wasn't great, but they've been doing all the right things for the last 6 years to improve both in terms of the retail to corporate mix, and within corporates they're doing all the right things with respect to A, lending to better rated corporates, and B, moving towards working capital finance rather than long gesture loans. So I think there are pockets of private corporate lenders which I think will benefit as the economic recovery materializes, and again I think that's one space that we are looking to add exposure in. And similarly, there are NBFCs which have been more sort of which haven't led to structural stories like housing, but are more linked to a relatively cyclical stories like, let's say, commercial vehicle financing and so on and so forth, which are again very dependent on the economic cycle, and we are seeing tangible signs of an economic recovery materializing. So again, that's one pocket that will benefit. So just to summarize, I think housing finance companies have been market darlings, but I think that's the pocket best avoided at this point. But good quality private lenders and good quality commercial vehicle financiers is something that we should look at this point in time.
Right. Okay, Gaurav, great speaking with you. Thanks so much for taking the time out and joining in today. That's Ambit's list of focus names and sectors that they're betting on right now.